Welcome back, XRP community. The signals we're seeing across the XRP ecosystem right now point to one word: scarcity. Analysts are warning that available supply is evaporating faster than anyone expected. And according to Jake Claver, one of the most followed XRP researchers, the market may soon face a supply shock unlike anything we've seen before. Claver's latest assessment of the OTC and dark pool markets paints a clear picture. He estimates that between 1 billion and 2 billion XRP were available for institutional purchase through private liquidity channels. But in just 1 week, 800 million have already been absorbed. That means more than half of the available supply has been consumed, leaving only a fraction remaining before institutions will be forced to buy directly on open exchanges. And when that happens, the effects could be dramatic. For months, analysts have warned that as ETFs multiply and more issuers hit the market, the hidden pools of XRP used for quiet accumulation would eventually dry up. Once OTC liquidity vanishes, demand shifts entirely to public markets, and that's when price discovery accelerates. To put it plainly, the dark pools are running out of XRP. Claver explains that these private markets were used by institutional players to accumulate large XRP positions without moving prices on exchanges. But with ETF demand rising and 6 XRP funds now live, including Bitwise, Franklin Templeton, Canary, Amplify, Rex Osprey, and Grayscale, those reserves are disappearing. And the story doesn't stop there. The next major ETF from 21 shares has now been scheduled for launch. Although the official approval date lands on November 29th, trading will begin on December 1st, the first business day after the Thanksgiving weekend. Its ticker, TOXR, is already listed and countdowns are active on exchange platforms. That means another wave of institutional capital is just days away from entering the XRP market. In today's trading session, ETF flows continued to impress. Bitwise led with $14.3 million in net inflows, followed by Franklin Templeton with $12.2 million, and Rex Osprey closed behind at $11.6 million. The remaining issuers, Canary, Grayscale, and Amplify, rounded out the session, bringing total XRP ETF inflows for the day to nearly $55 million. Every one of those dollars translates into direct XRP purchases on the spot market, removing more tokens from circulation. Meanwhile, Binance is flashing a major signal of its own. On-chain trackers show massive stablecoin inflows from Wintermute, Binance's internal market-making partner. When stablecoins flood into an exchange, it usually means one thing: preparation for crypto purchases. That influx suggests Binance may be positioning to cover short exposure or trigger a short squeeze by using its liquidity to lift prices. In practical terms, if you see crypto markets suddenly move higher over the next 24 to 48 hours, understand that much of that motion may not be organic. It could be exchange-driven liquidity operations, the same kind of internal market rebalancing that often precedes price resets before ETF conversions or macro events. The combination of these forces, dark pool depletion, ETF demand, and stablecoin accumulation, creates an environment where the next major XRP rally could ignite without warning. Once OTC supply is exhausted, every ETF will have to buy from open markets, and with daily inflows already exceeding tens of millions, even small changes in demand could cause large moves in price. Jake Claver also points out something critical. The largest players, BlackRock, Vanguard, and Fidelity, have yet to file for their XRP ETFs. If and when they do, the influx of institutional capital could dwarf what we've seen so far. At that point, the number of XRP spot ETFs could even surpass Bitcoin's. And for anyone skeptical that this accumulation matters, just look at the numbers. With 800 million XRP already removed from dark pools and roughly a billion remaining, the countdown to scarcity is well underway. The OTC well is running dry, and the next stop for liquidity is the open market, where visibility means volatility. There's also a growing belief that several high-value transactions on Kraken and Bitstamp Where XRP briefly spiked to $91 in isolated trades, may have been early glimpses of what happens when small amounts of supply meet overwhelming demand. These anomalies, once dismissed as errors, are now being revisited as early warning signs of what happens when liquidity runs thin. In short, the infrastructure is tightening. ETFs are expanding. Exchanges are refilling their reserves with stablecoins. And institutional buyers are quietly setting the stage for what Claver calls the Great XRP Liquidity Reset. Here's the key takeaway. As supply contracts and ETF demand continues to build, XRP is entering a scarcity-driven phase. Whether the next price move comes this week or next quarter, the mechanics are the same. Too many buyers, not enough tokens. So when the hidden pools finally run dry, the real price discovery begins.